Hi, everyone. So we have an interesting session now. It's being taken by EFI, who's the Senior Vice President in Prequin. He'll take us through the landscape in terms of what is the way forward for PEVC. And in his presentation, he'll also be reviewing the 2021 landscape. So just to give you a brief about EFI, he heads the Asian operations for Prequin. Joined Prequin in 2010. He leads the research strategy, manages its operations. He's been one of the pioneer members of the Singapore team and has successfully led the setting up of their offices in Hong Kong, Manila, and Guangzhou. He has deep experience in private equity, real estate, and infrastructure research. With that, I would like to welcome EFI on stage. Hi, EFI.
Hi, Rohan. Thanks very much for the introduction. I'm very pleased to be here today with everyone to be sharing our observations on the way forward for India private equity and VC. So let me just bring up my slides. Just give me 1 second. Cool. Screen share. Apologies, I don't see I don't see the PowerPoint under the window option. Just give me 1 second. Yes,
You seem to be having some technical glitch, it seems.
yes. I think
Okay.
yeah, it was
Is it? Yeah.
cool. I hope everyone can see my screen share now.
Yes.
Um, thanks,
All right.
Rohan.
Go ahead.
Excellent. Cool. So, as I said, really exciting to be sharing our observations on India P and VC today. We will review this year up to September, and then we'll look at what are some of the points for us to be aware of as we forge ahead in 2022. Um, in today's session, I will cover AUM and fundraising, and then we'll talk about performance, which is a big topic that everyone is interested in, and we'll follow that up with deal flow, and finally, an outlook on investor appetite. Before we dive into the data, this was what my marketing team said. We have to show at every conference and event. So, if you have seen this before, you might notice that we have added a few more names to this map. Prequin is expanding pretty aggressively, and you will see new names like Sydney and Tokyo, Dubai, which we added to our team during the pandemic, and we're expecting to grow more in 2022. And just a reminder, a lot of the data that I'm going to speak about can be found in our joint fact sheet with the IVCA, and you may follow the QR code here for the download link. Alternatively, I'm going to share my email address at the end of this session, and you can reach out to me if you want a copy of the fact sheet too. So AUM and fundraising, private equity makes up the largest component of India's alternative assets market. $31 billion of this AUM can be attributed to private equity and VC as of December 2020, and you will notice that the AUM held steady between 2019 and last year, and this can be attributed to three things. One is the lower fundraising last year, which I will show us in the later slide, and there were lesser exits made, and also a general depression in valuation because of the pandemic. What's growing in dominance though is those bars in orange, and that's venture capital, from making up less than half of India's AUM at the start of the decade. It is now more than 60%. So this next chart is a 10-year window into PE VC funds raised by India-based managers. The pandemic initially caused a slowdown in the fundraising, which is similar to the worldwide picture. But 2021 has seen a really, really robust and strong recovery. You can see that, that bar for 2021 is very high, much higher than any of the previous years, right? So $3.4 billion have been raised so far, which is the highest on record, and it's helped along by an increase in the average fund size. In fact, the average private equity fund is now $400 million, and an average VC fund is now raising $120 million, double the previous average for the last 10 years. I do think that the immediate impact is there's going to be more competition for deals, but the India market definitely has the depth to absorb all of this liquidity. And this year, emerging markets have been the darling of investors, attracting lots of capitals from LPs everywhere. Our data shows that emerging market fundraising has exceeded 2020 levels, and it's the same everywhere we look, whether it's India, Southeast Asia, Latin America, or BRICS. Emerging markets are gaining traction. On the other hand, developed markets are trying to play catch up. In most cases, fundraising this year is either on par or slightly below the level seen at this same point in 2020. So this swing in favor of emerging markets have been brought about by a hunt for assets at depressed valuation. So in that sense, investors are willing to take on risks afforded by emerging markets. However, they are taking steps to limit this risk by choosing to go with experienced managers. So our data shows that the majority of funds that have completed their final close this year are led by managers raising their second, third, fourth, and even their seventh fund. So first time funds make up 44% of the pot this year, which is the lowest levels in the past few years. The greatest motivation behind why investors allocate to PEVC is the potential for outsized returns. In this section, let's look at how the performance of India funds compare with the rest of the world. So this chart on the right shows the net IRR of all PE/VC funds of all vintages divided into quartiles, with the global funds at the top, APAC, and then India. The light blue bars labeled as Q1 are the range of top quartile performance. The dark blue would be the bottom quartile, and then the tiny slivers in the middle, these are the quartile twos and threes. So a first look, India seems to have a tighter dispersion of returns. And for global funds, a top quartile performance can range from 23% to slightly more than 1,000%, while top quartile India funds are in the 32% to 74% range. Second, a bottom quartile fund in India remains mostly in the positive territory, while global and APAC funds are mostly almost negative or almost mostly negative. But I suspect both of these points here do not fit with the real experience of LPs. So why is that so? I think two things are at play here. Number one, survivorship bias. Number two, representation of the data set. There's bound to be survivorship bias in any performance data set owned by any database. Anyone who claims otherwise is not telling the full truth. Because of the smaller size of the dataset, any survivorship bias in India is going to have a larger impact on these numbers than global ones. For global funds, we have performance data for 1 in 5 funds. For India, that representation of the universe drops to 1 in 10. So I'm glad that SEBI has taken steps to address this by leading an initiative to formulate accurate and credible industry benchmarks. And I'm very pleased and excited to let everyone here know today that we have been appointed the official benchmarking agency. So working with IVCA leadership and members like yourself, we are committed to produce accurate and comprehensive benchmarks. And this will be done through a massive data collection exercise in the coming weeks, where my team will reach out to all fund managers here to obtain performance data. We have years of experience doing this. Your data will be stored securely and commingled into benchmarks that are anonymized. By doing so, we will be boosting investor confidence in the India market, especially those which are preparing to take on this exposure for the very first time. And to start, we will produce benchmarks for each of the three AIF categories. With enough time and data, we will be able to produce more granular splits in the future. For example, we would be able to split these benchmarks by sub-strategies, fund size ranges, or industry focus. So next week, we will be running our first workshop for fund managers to understand what's required, how the data collection process goes, what data points are we collecting, and how data can be submitted to Preqin. More details will be shared in this workshop. Your investor relations or management team should already have received an email from us. If you haven't already signed up, encourage us to register through this QR code. So turning back to our data, right, let's look at where all this capital that's been raised is going. On the buyout front, 2020 was a blockbuster year, right? We can see by the orange line, spiking to very high figures. Almost $20 billion worth of transactions were made, and of course, a significant chunk of that can be attributed to the Reliance Geo transactions. But even without that, 2020 will still be higher than 2019. We are seeing volatile swings in recent years. You see one year going up, another year going down. But on the whole, total deal value is at elevated levels in the second half of this decade compared to the start of the last 10 years. And because of this, average deal size is also going up. So where is most of this capital going? Our data shows that consumer, financial services, and healthcare are the top three sectors absorbing this capital. So I was in the previous session earlier, where it was a fireside chat between Chairman Chandra of Tata Sons and Renuka. And Chairman Chandra did say that health tech, the health and wellness space, is one of the sectors that excites him very much. And I think we can see that playing out on the deals market too. So VC deals are currently capturing the attention of investors everywhere, and it is no exception in India. This year, about $26 billion worth of deals have been made so far, outstripping the $9.4 billion recorded by buyout deals in the previous slide. And as I mentioned at the start of this presentation, there is intense competition for deals, and that has contributed to this record value and also to the formation of more unicorns and decacorns. We hear Oyo Rooms, Flipkart, Think and Learn. These are some of the recent examples that come to mind, right, of these unicorns and decacorns. As more companies achieve these coveted statuses, they signal a move into the next phase of their growth. And I believe what's on the horizon will be a pickup in exit activity. So for an investor outlook, we do see a wide range of international investors investing in India. There are some 1,400 institutional LPs that we track on the Preqin database. The Americans are systemically important, making up about 60% of this investor universe. And the top investor types are the foundations, pensions, endowments, corporate investors, and insurers. Together, they comprise almost two-thirds of this 1,400 universe. In terms of capital flow, though, Singapore, where I am based, is a key partner to India. Last year, FDI coming from Singapore came in at about 29% of the year's total, making Singapore India's top foreign investor. And GIC is one such long-time investor, having started to take on more exposure to India almost a decade ago. They do have a diverse portfolio of not just private and equity assets, but also in the property market as well. So not only do we track investors and their activities, we also speak to them regularly through various channels to understand their future plans. And one such channel is an annual survey. In June last year and in June this year, we ask investors globally, which emerging markets do you think present the best opportunities in private equity? And in both years, India ranks really high on the agenda, ahead of other markets like Central and Eastern Europe, South America, the Latin Americas, Africa, and Middle East. This red hot fundraising market that we're seeing this year points to this intent being translated into actual commitments. And before I wrap, one of the questions that my team and I we've been debating about in the last few weeks is whether the persistent regulatory actions in China, uh, with that happening in the background, can India now start to capitalize on that? So my view is this: India can absorb some of the outflow from China, but not in its entirety. I think sectors where Chinese companies predominantly serve external markets. So these would be textile manufacturing, cars, computer manufacturing, uh, the making of electronic components. I think these are easier to pivot away from China to regions like India and Southeast Asia. In fact, this was what happened during the Trump years, where tariffs were slapped on Chinese exports, and so companies started to relocate or have a second note to their supply chain. But for sectors, I think where investments are made to serve the Chinese market, this would be healthcare, semiconductor, telecoms. I think it's far harder for the capital to just flow to alternative markets because the economic fundamentals of China and India and other emerging markets are just not the same. So I've talked a lot, and just to summarize the key points here, we are expecting a healthy AUM outlook that is boosted by a record year for fundraising. We see venture capital driving private equity VC growth in India. And according to the data that we have on a best available basis, India funds show a tighter dispersion of returns, which is great, but we do need more comprehensive benchmarks. And by working with SEBI and IVCA, the AIF benchmarks are going to drive that comprehensiveness of data that will benefit the entire market. We see a strong deal flow, again, driven by venture capital. And we also see wide-ranging investor appetite for India, and we know that India is firmly on investors' radar in the next 12 months. So here I'm just going to take a quick pause and just make a quick check in the Q&A box to see if any questions have come in. Cool. Yeah, I see some questions here. How can you get to the presentation here? We will make this deck available on the Preqin website. This deck is also with the IVCA team, so you can reach out to me. I'll flash my contact details later to show you how to reach me. I'm just seeing now that some of you mentioned the audio is bad. So have a look at the deck when it's made available online. And if you have any questions, do feel free to reach out to me. I'm more than happy to catch up over virtual coffee or tea to trade pointers. Okay. Cool. So let me just go back to the full screen mode. Yes, and just a few final words from me. If you have enjoyed this presentation so far, we have more actionable insights on Preqin Pro, our comprehensive database, and a repository of research reports, fact sheets, and research notes on Preqin Insights. That's our portal. for all of the great content and material that we put out. We also provide complimentary top level performance benchmarks for investors and fund managers. Do visit this link to try it now. I mentioned earlier, if you'd like to have a discussion with me or trade pointers, more than happy to. You can ping me over LinkedIn or email, up to you. And I just want to say a big thank you to Rohan and the IVCA team, and also to you, the audience. You've been such wonderful audience. Thank you for spending the last 15 minutes with me.
Oh, and few of them have already started asking about the presentation. Can we share? So yeah, all right. Great insights, great data sets, and we now know where the opportunity is in India. So thank you so much for sharing these insights with us, EFI. Thanks for your time.
Thanks, Rohan. Cheers.
Cheers.